Well, happy Friday. Welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. It's great to be back because this week I was attracted to what some Canberra friends told me was, and I quote, the world's best beer. Here it is. Crank it up with BentSpoke Brewing's Crankshaft. Produced in, you guessed it, sunny Canberra. Crack it! World's best. A pale ale. I know them by now. Starting to get this, real knowledge of beers. Not bad, not bad. Actually, I looked it up and the website said that Crankshaft won a silver medal at the 2017 International Brewing Awards. Gee, I wonder where that was held. Anyway, this week's focus is value, which is on a tear. Let me tell you, everyone wants it. And it's what I'm getting from this beer. It's not bad, but I'm getting it because I didn't pay for it. Zero cost base, 100% upside. Always remember that your return from any asset is dependent on what you pay for it. Key tenet to the value philosophy. Speaking of which, another toast to Blue Chip Value's portfolio, which since December has outperformed the benchmark ASX 200 by a whopping 10 percentage points. That's 1,000 basis points of outperformance. Here's the Blue Chip. Past 2 years, 28% a year. Not bad when you can get it, which we have been. The thing is, investing on my own, I really do prefer to investing in a fund. And why is that? I don't have anyone to answer to. Like fund managers have to answer to people every few months. And the thing is, I can hold positions longer, so I can take on pain. And that is the key to Blue Chip Value portfolios' really strong performance, because it's been about holding on to positions when, the market was saying, we're a bit nervous about these positions, get out. So that's a key. And the key, one of the keys to the Blue Chips portfolios outperformance was the banks. So why is that? Because we held on. And why did we hold on? Because we generate price targets using our Blue Chip methodology, using the Blue Chip value model. And those price targets are partially based on analyst consensus forecasts. Now back last year when the banks were getting hit hard, we were in pandemic, Omicron had hit and people getting very nervous about growth. So they're saying banks were basically ex-growth. And those analysts' forecasts were saying, yep, there is going to be pressure on earnings, like we've seen the mortgage competition, but there's not going to be as much pressure as what the market was factoring in to the valuation of banks. So it was saying, the market was basically discounting more weakness than those analysts were, and that's why we had a buy indicator on the banks. So as I keep saying, it's about where expectations are. But what that being a value investor means, is that regardless of the asset, it's what you pay for it that counts. So that was the key insight of Warren Buffett. It sounds simple, but basically Warren Buffett said something like, show me I don't care how a great business is, it's what I pay for it. That's going to, make me money. So I'll only buy at the right price. Whereas some of these sort of more these growthy type fund managers are saying, I'm going to surf the momentum. Well, when that momentum goes, it goes very quickly, and in that way value usurps over time. So what we did was we got out of CBA, we bought into Westpac, we bought more at Westpac, NAB and ANZ, and we also bought Bendigo Bank, which I'd encourage the beers people to look at. We covered Bendigo in this week's Blue Chip. Why is that? Because it's a beneficiary of rising rates. Why is that? Because it's got a big deposit base, so it's got high margins. You can read more in this week's issue. But basically, hunting for value doesn't mean you can't ride waves. Like, clearly, this is where my second toast is orientated, which is Paladin Energy, whose Namibian mine is going to be back producing uranium in the next couple of years. And this is a big achievement because it's a sign of the changing energy mix around the world. Like, uranium was on a fast track higher, and then it got supercharged by the Ukrainian invasion. But nevertheless, uranium stocks are in a great position because of the limited supply of uranium and the increasing predominance of nuclear reactors. Because basically the world's coming to the conclusion, to make these emission targets, we're going to need the clean energy that nuclear provides. I mean, that's the reality that's dawning. And I guess the point that I'm talking about is value hits you in the face. Like, you can't really time it. Like, people talk about timing, but like, let me tell you a little secret. Basically, no one gets timing right. Or if they do, it's just luck. I mean, who could have forecast that Russia was going to invade the Ukraine? But what we did was, in the past 12 months, we've been seeing the tightening supply of commodities versus the increasing demand for things like batteries and other industrialization initiatives, so like infrastructure. So we've been seeing that increasing demand and tightening supply, and what that event did was supercharge it. So now, oil's a classic example. Basically, it went from like $80 or something last year, or less, and it's the invasion basically saw it supercharge the price through to $130, but now it's back to $100. So it's still on that upward trajectory. Just markets tend to overegg themselves sometimes, but you got to get the main trend. And that's what being a value investor is about. It's positioning your portfolio for these windfalls, because really, who knows what's around the corner. So this week, myself, I've been buying some med techs. I mean, some of these stocks are really go-go stocks, but now they're maybe not pariahs, but they're certainly on the nose compared to what they were. And I like them because there is value, and I see a really strong balance sheet, and I see the stocks also showing signs of life and management confidence. So these are some of the things I look for. You can check them out in this week's small caps report. So if anything positive happens, it's off to the races. Like, making money is understanding value, but you can't always capture it. You have to have patience as well. So what's coming up? We've got our 11 best buys in small caps. We've got commodities analysis that shows what the effect of the invasion has had on commodity prices. That's in our blue chip, and we also have our outperforming portfolio. You find out all about, the 25 or so stocks in that. And I'm really excited because on the small caps front, we've got a new stock coming up. So we're unveiling that next week, and of course, loads more sub picks coming your way. So let's go back to the world's best beer. Well, if I was on the panel, Crankshaft would certainly be in the finals. But as far as world's best, you'll have to wait till next week's beer to find out. Here's Beers with Rich signing off.